Boom, and we're live. Welcome everybody to AMA number 15. Thank you, Perry, for reminding me of the number. I see a lot of new faces in here. Like I said, this is going to be a little shorter than the usual AMA. I aim to do this. I aim to hold this for at least 2 hours, and hopefully, eventually, because actually it takes some training to do these. Talk for 2 hours, 2.5, 3 hours straight. Eventually, I'd love to make these, 2.5 hours, 3 hours, just to stay here as long as I need. Usually I have something else booked or scheduled for later in the afternoon, so I can't do longer than 2.5 hours. This time a little shorter. It's gonna be 90 minutes because I got a meeting at 1 p.m. Eastern. So I may be able to stay a little longer, but not a lot longer than that. And usually I talk for about an hour. I share what I want with you guys, what's on my mind. This time it's going to be a little different because I'm going to start with gold. And I just don't think I can do an hour with gold. I don't think gold is that. I mean, I love trading gold, but I don't have that much to say. I think gold is a lot easier to trade, and it's not nearly as puzzling to me as a cycles analyst, probably because we have publicly trading. Gold has traded publicly since 1971, I think. So we can go all the way back to 1971. In fact, on this chart, I can show you. For those of you who didn't watch lesson 5, because I know it's not available on YouTube. It should be soon. I apologize for that. I've been slow to re-edit all the lessons. But yeah, gold has been trading for long enough. I think it's exactly 1971. No, actually it goes back further. No, it's 1971. This is fake data. So 1971, we have all this data. I think 1974 is when we have daily data on gold. And I pretty much know gold cycles pretty well. So it's not as much of a mystery to me as Bitcoin is, because I can rely on that history. And I've seen moves like these before. In fact, when I started my trading career in 2009, gold was undergoing one of these moves. So I've literally traded this before, kind of know what to expect or what to look for. So without further ado, here's my thoughts on gold. And again, after 30 minutes or so, I'm just going to do a proper AMA. You can start asking your questions right away because I actually want to get to those. And hopefully, if we do about an hour, maybe 70 minutes, an hour 10 of questions, everybody's going to be happy. If it's too short, I apologize. Next time, it's going to be a little longer. And it's going to be from my studio in Colombia, which most of you probably have never seen. Some of you have. I have held some AMAs from my Colombian studio, which eventually is going to look a lot better than this one. I like how this one looks. But I'm going to have like these sound panels and whatever, so everything sounds better. And the camera doesn't move when I pound on my desk, which I do a lot. Anyways, enough of that. Gold. So let me start by saying that I think gold has made an important top, but not a major multi-year cycle high. But I do think that gold has made a high here of significance. And it's for one simple reason, actually. I don't even have to go into deep cycle analysis for this or even the geocosmic forecasting, even though we do have some high forecasts for late September, which perfectly lines up with a late October forecast because this is for an 18-month cycle. And the margin of error there is about 4 weeks. So if the model highlights late December for a high, the high can just as easily be late October or as early as late August. We have a high so far that looks pretty significant for late October. That's good enough for me. But the main reason I think gold has made a major high here, and by major I mean 18 months. I don't think this is a multi-year cycle high. Gold's primary cycles beyond the 20-week cycle, which you can find on any TradFi asset. And for that, you can go on YouTube and you can check lesson 4. When I go through the S&P, and I do bring up that there's a major 20-week cycle in pretty much any TradFi asset. It's about 100 trading days. You can find it everywhere. Gold is no exception. But beyond that one, the cycles that are most significant on gold are 18 months, which it shares that with the S&P 500, and also 7 years. And it's about 7.5 years, I think. I don't remember that from lesson 4, but it's about 7 years. And then there's a 15-year cycle. So 7 and 15, or 7.5 and 15, 7, 14, principal variation there, less than 1.7, I think that is. The cycle varies a little bit, but it's about 7 to 8 years. The last low that we've seen for that 7-year cycle, and I'm very sure that it's a 7-year low, it's pretty much confirmed by now, was October of 2022, right here. And so if you add 7 years to that, you would not expect the next low until 2029. We're in 2025 now, and the cycle is bullish, which means it should be right translated, meaning the high should take place on the second half and toward the end of that 7-year period. If the low for the next 7-year cycle on gold is expected for 2029, you would not expect the high until at least 2027 and probably 2028. It could even extend beyond that. It could even extend into 2030. The reason for that is there's a lot of potent cycles that are coming to an end in 2032. This is not my work, actually. It comes mostly from Marty Armstrong, who has been talking about 2032 for quite some time. So in reality, personally, even though this 7-year low is scheduled for 2029, I actually think it's going to probably extend into 2032. If it does extend into 2032, then you would not expect a major high on gold until 2030. We're halfway through this decade, the 2020s. I am not expecting any major highs on gold right now. Let me just say that right out of the gate. I don't think this is a major high. Just like, August of 2011, this was a major high. This is August of 2011. This is a 14-year cycle. You're going to see me hear me say 14, 15 years interchangeably, because it's the same cycle. It's a long multi-year cycle. This is a 15-year cycle, 14-year cycle. It took place in August of 2011. And leading up to that 14, 15-year cycle high, gold was going parabolic, pretty much like now. So in that sense, these two rallies, they rhyme a lot. The main difference between this rally and the 2011 rally is back in 2011, we were very overdue for a multi-year cycle high, a very significant high, because the last 7-year cycle correction had taken place in 2008. And once, for those of you who watched lesson 5, if you don't remember this, please rewatch it. This 7-year correction that took place in 2008 is the only 7-year correction that we can see in gold's chart that was not picked up by the 7-year cycle filter, meaning it was a very weak correction. And typically when you see that, if you see a very weak 7-year cycle correction, chances are by the time the 15-year cycle is due, you're going to see something meaningful. And indeed, that's what we saw back in 2011. So in 2011, August of 2011, major high in gold. The bottom is not reached until December of 2015. And I remember these highs and lows very well, because until I became a mostly crypto trader and a crypto bro, I was mostly a gold trader, a gold bug. Still am. I still trade gold quite actively. I stopped trading it during this sideways consolidation range. And it wasn't until it broke out in 2020 that I was even remotely interested in getting back into gold. And to be honest, I've only been interested in trading gold again actively. This is one of my most traded vehicles now, because it's become a thing in crypto, and you can find gold derivatives, XAUT or Paxos Gold derivatives on most major crypto exchanges. Primarily Deribit. Deribit has very deep and liquid gold perpetual markets. So it's back in action for me. I traded for that reason and that reason only. I mostly trade on crypto exchanges, and up until recently, I couldn't really trade gold very well. Now I can, so I'm back to trading it once again. Gold is very predictable for a cycles analyst, so I actually love trading it, because once these 7-year or 15-year cycles get on an uptrend, these trends last for years. Just to give you a sense of how powerful these rallies on a bullish 15-year cycle in gold can be, this rally that you see here on gold that ended in 2011, it actually started all the way back here in 2009. There's a double bottom here. This is an 18-month cycle. I'm going to get into that one in just a minute. There's a double bottom on an 18-month cycle between 1999 and 2001. And that kicked off a major rally on gold that lasted for 10 years. So 10 years of upside. is what we were able to enjoy back then. And I actually think that for geopolitical reasons, monetary system is coming apart at the seams. This rally is probably going to be a lot stronger for gold than it was back then. And back then there was a lot of speculation as to why gold was going up so much, and it was all about China and the dollar being replaced and whatever. The same narratives you hear today. It's not that I'm not believing in those narratives. I think it was a little too early back in 2011. I think this feels like it. This feels like that major moment when something happens to the monetary system and gold re-enters the monetary system in some fashion. I think that moment is between now and 2032. We're going to see that. I think we already are. There's a lot of speculation that gold, that we're going to see gold-backed currencies again. I don't think we're going to see that, but it is pretty clear to me that a lot of nations are choosing to use the dollar as an exchange currency, like as a primary global exchange currency. And by exchange, I mean they trade in dollars, but they store those dollars in gold. So gold is becoming, so the dollar will be the medium of exchange, gold will be the store of value in this new monetary regime that we're entering into. And so for that reason alone, I think gold is interesting to trade because there's a very strong narrative playing out with gold right now. But let me zoom in into this 2011 high, because for some time already, I was looking at how everybody on Twitter was talking about gold. I'm not talking about anybody in particular. I'm just saying that leading up to this high, zooming to the present, leading up to this high on October 21, every time I would log in on Twitter, it was gold, gold, gold. Everybody was talking about gold, and it was gaining too much attention. Not only that, this volatility was insane. I think I mentioned in one of these AMAs that my last gold purchase was at 3,500. I had a limit order after this breakout for 3,500 on gold. I bought it on September 3rd, and I was up a crazy amount in a crazy low period of time. Just move this thing. So I don't even know how long it took, but within about a month and a few weeks, I was already up 20%. It doesn't sound like much in the world of crypto, but in gold, that's quite a bit. I mean, I was trading gold leading up to this high. I was trading gold every time it pulled back to this moving average here. This is actually the 20-week cycle FLD. If you don't know what that is, please watch lesson 3. But if you want to know the actual inputs, it's a 25-day moving average. We move this forward by 37 days. You get this line. And during gold uptrends, this line is usually tested or crossed briefly. And once prices move back above, you can just buy that. And you can see that ever since this breakout here in October 2023, every time, there's not been a lot of these trade setups, but every time gold pulls back below this FLD and back above, that's a major buying opportunity. And so all of these trades pretty much work. And you can go all the way back to 2000 and see this type of trade setup work every single time. And notice that it worked here as well. Didn't buy this one because I actually thought, if you go and see the forecast for gold, April of 2025 was highlighted as a likely 18-cycle high, 18-month cycle high. And so I didn't actually buy this pullback. I bought it when it broke out for that reason, because I thought gold was overdue for a correction. Turns out we got the correction here. That's a long way of saying that every time gold goes parabolic like this, and you can tell that a market is going parabolic because everybody's talking about it. This is why I brought up Twitter. Everybody's talking about something, and that something looks like it's going vertical, then you're near the end because everybody's buying into it. A lot of people who have no trading experience reached out to me saying they're getting involved in gold. I've seen this picture before, and so I thought, okay, I was wrong about this April high, clearly, but I think we're coming up to a major high soon. And the thing about markets that go parabolic, and this is especially true of gold, is that I told myself, next time I see gold drop by more than 4% on any given day, that's it. That's the high. I'm getting out. So I actually got out for 4,200. I think I saw 4,175 was my final exit price from my position. Personally, this is personally what I did. And for the simple reason that I just stayed disciplined. I just said, okay, this is a more than a 4% move. Gold actually fell by 5%, 5.32% on that day. I think this is the biggest down day for gold since 2013. That's what I read. I also saw people mention 2023. I actually looked at 2023. I haven't seen any, didn't see any 5% drops for 2023. But let me take you to that August of 2011 high, which is the last time gold went parabolic, in my opinion, like really, truly went parabolic. And what do we see? We see this parabolic uptrend. We see volatility pick up significantly. These 3% moves, 2% move, 3% move, they became normal for a brief period of time. You kind of saw the same thing now in October. Gold was moving more than it usually does. Rarely a good sign. And then you see gold fall by 3.5%. I actually told myself, next time it falls by 3.5%, I'm out. And you can see here that back in August 2011, 3.5% move, followed by a 4.3% move, and that was it. That was the end. That ends the move for a while. Now, back then, we were overdue for a 15-year cycle high, and that's what we got. I'm not calling for the same now. Just because it falls by 5% doesn't mean that a multi-year correction is starting. I don't think that at all. However, I do think that once you see these trends break significantly, that means that a lot of people who came in late and took on a ton of leverage have been liquidated. Kind of sounds like Bitcoin in 10/10, then 10 of this month. But we'll get into that, I'm sure. But that's typically how these vertical moves end. Just one big red candle, and that's the end of it. That's the end of the rally. And that's what we saw in gold recently. Now, again, this doesn't mean the setup or market going vertical, then falling by a lot. That doesn't actually line up with a 7-year high or 15-year high, or necessarily any cycle of any magnitude other than a 20-week high, of course. This is obviously a 20-week cycle high. But this setup in this context, where we haven't seen an 18-month correction in years, this lines up perfectly with what I was expecting for April, actually. Again, I was wrong about April, but I think this time I'm pretty convinced. This is an 18-month cycle high, an 18-month cycle high. It's not a 7-year top, it's not a 15-year top, but 18 months is quite significant. And especially since we were this overbought, I would expect this particular 18-month correction to last well into next year. So I think gold is done. I think it's done for a few months. And it's only once people write it off and forget about it, and all these people, these latecomers that were trading gold 2025, like it was the new hot thing. Once those people leave, I'll jump back into the market. Now, what am I expecting? Well, I'm expecting gold to at least pull back to the blue line, the 20-week FLD. But if I'm being honest, let me show you here the filter for the 18-month cycle on gold. So this black line, let me get rid of this one. The black line is the 18-month cycle filter for gold. And for those of you who know what a filter is, you know what I'm talking about. If you don't know what I'm talking about, please watch lesson 2 on YouTube. Suffice to say, this black line highlights every high and every low. Well, not every single one. You need to apply some discretion here, but it highlights most of the 18-month turning points in gold. And so I'm showing you here 2020, 22 through 2023. This is the entire post-COVID correction on gold. This is a 7-year cycle correction within the context of a bullish 15-year cycle. That's what you're watching on the screen. If I zoom out, it's going to make a bit more sense. It's the this is the low. This is the 7-year cycle low. And you can see that within the 7-year cycle, the black line goes up and down several times. This 18-month, the 7-year cycle breaks down into several of these 18-month corrections, and you normally see quite a few of them. But ever since we made the 7-year low here, this is a 7-year low. Let me highlight that. 7-year low. Ever since we saw this 7-year low, we only saw a single, as per our filter, we only saw a single 18-month cycle correction right here. This is all we have seen so far. Let me highlight. There we go. All right. So normally within a 7-year cycle, we see several of these 18-month cycle pauses, but not this time. Well, that speaks to the strength of this particular 7-year cycle. But it doesn't mean the cycle is suddenly gone. The 18-month cycle is still here, and it's very, very unusual to see gold. How should I sell this? How should I say this? Negate it. Like, it's very strange to not see gold's 18-month cycle, and yet since this low here, this is, according to the filter, the last 18-month cycle low and pullback that I can see on this black line took place in October 2023, a very brief 18-month cycle. We have the low on October 22. A year later, which is normal, I actually talk about that on lesson 5. A year later, we saw the last recognizable 18-month cycle low on gold, October of 2023. That was 2 years ago. So this cycle is very overdue. It's quite overdue. It's fine. I mean, you can have this low come in, after 2.5 years. It's fine. Cycles can vary a lot. I don't think I've seen this before though. Maybe if we go back to the 2000s, but I don't think so. I actually think you see this. Yeah, you do see it. You do see it even in this rally from 2001 through 2011. You see a few of these 18-month cycle pauses. Well, you see it disappeared here between 2008 and 2011. So when the upturn gets really, really strong, you don't see the 18-month cycle anymore. And I think we're going to see it again. So what I'm trying to say is this rally, and the way filters work is you need quite a bit of downside on this particular market for this black line, which is a 100-day moving average, 100 trading day moving average. You need a lot of downside for this thing to register the drop. So we need to see this black line do something like this. We need to see it go up, we need to see it peak, and we need to see it go down. This is going to take a multi-month correction to show up on this black line. This black line requires, by definition, a significant downturn in the price of gold, or a long pause. Notice that this pause here between April and the breakout in September, it didn't register on this filter. So we're looking for more than this. We're looking for more than what we saw earlier this year. And if we turn this one into an FLD, right there, we should see gold at least get close to this FLD. It doesn't actually have to, we can go over this here, doesn't actually have to pull back all the way back to this black line. I think during strong uptrends, gold doesn't actually pull back to the 18-month FLD, but it gets close. Notice that here on these pauses, that could be identified as 18-month cycle corrections within the context of a bullish 7 and 15-year cycles. Gold does actually pull back to it. It doesn't cross below it. I'm not expecting that. Even getting close, as we saw here, that will be good enough. Doesn't actually have to cross below this filter because the uptrend is just that strong. However, it hasn't actually done that. It's been trading well above this FLD for years now. And so I'm expecting gold to pull back to it, at least get close to it. So my target for this correction is about 3,200, I would say. Depends on how long it takes. Maybe 3,500 is going to be good enough if we make our low by May of next year. But I do think gold is done here. And I actually look back. I didn't compute every single 5% sell-off, or sell-off that was more than 3.5% going back to 2000. But pretty much every time you see gold do this, fall by 5%, it's either a significant cycle high or gold is in the middle of a powerful downtrend. We saw plenty of -3 to 5% days during the 11 to 15 correction. But beyond those, most of those big sell-offs in a single day, they take place at significant cycle tops. For example, the last 7-year cycle, when it ended, gold fell by 5.72%. And it's not obvious at the time that a significant cycle high has been made. If you look at it here, I would say that most people looking at this chart will still be bullish. It's going to take months for them to throw in the towel and say, okay, I'm calling it quits. This thing is done. And that's what I'm looking for. I'm looking for most market participants to throw in the towel with gold and think it's done, or at least it's done for now. We're not even close to that yet. So yeah, my view on gold is this is an 18-month cycle high. I don't think it's more than that. It could be, but I don't think it is. And it's not going to make a low until probably the middle of next year. So it's done for now. I'm still looking at it, but I think it's pretty much done for now. That's all I had to say as far as our presentation for this one, because I'm actually hitting the 30-minute mark. So I'm just going to move to your questions now, guys, because like I said, I have to go in about an hour or so. All right. Before that, I'm going to get some water. My voice is killing me. So Perry, you asked, I'm going to start with you first. You asked gold, silver, global liquidity, BTC alts. Can't do all of that in this presentation because otherwise, or unless you want to ask a specific question, because that's going to take up another hour at least. Silver, I do think that this high on gold coincided with silver hitting 50 again. Let me see that. Yeah, it hit 50, didn't it? Yeah, so this is technically a new all-time high in silver. Silver was also going parabolic at the time. It hit 50, and that was a death knell for this whole metals rally. Do I think silver is going to exceed 50 in any significant way? I think eventually it should, but not now, not until it pulls back to this moving average. And notice that silver wasn't as overbought as gold. I'm just looking at this for the first time because I don't really trade silver. You know why now? It's mostly because there are no silver-backed crypto assets, so I don't really trade it. However, I can see that silver's 18-month cycle was alive and well, unlike in gold. So you can see a low here in February 2024, and then there's this low here in April of 2025. This is the last 18-month cycle that I see. So it's not as overbought. However, I do think that the fact that it went back to 50 on no news other than the fact that gold had gone up a lot, because I don't think silver was rallying for any particular. I mean, central banks are not accumulating silver. They're accumulating gold. China primarily is buying gold. Central banks are buying gold. All the headlines are about gold, but silver has to move because I mean it's poor man's gold, right? Silver is poor man's gold. Okay, fine. That's a good story, but it's not a catalyst. So when I started seeing silver move, I actually got a little more bearish. I thought, okay, this is probably the end. And by the time it hits 50, people are gonna liquidate. Now, again, I don't have a strong view on silver. I don't know if it goes to 150. I don't know if it goes to 500. I don't know what Peter Schiff is saying about silver. For all I care, for all I know, yes, it can 10x from here, but I don't know within which time frame because I don't really study this one. To me, just as a trader, just as a short-term indicator, the fact that silver hit 50 was to me, it meant that we were close to the end. We were close to this significant cycle high. It was mostly sentiment. It was mostly people getting absurdly bullish on gold on social media that caused me to get a little bearish. It was mostly that. But then on top of that, when I saw silver cross 50, I thought, okay, on no news other than gold is making the all-time highs and everybody's talking about it. Those two factors combined, and the fact that, as I showed you, we haven't seen the 18-month pause on gold in years. In 2 years, we haven't seen it, and that's kind of unusual. All those factors combined told me that, okay, this thing is probably done for now. Before I move on from the metals, from gold specifically, I will say, just throwing it out there, because as a trader, I always think in terms of probabilities. So I do want to say, is there a probability, is there a chance that this is the 7-year cycle high? From a pure price action perspective, I'm not talking about cycle duration. So I'm not thinking here, well, the last low is in 2023. And so if I add, sorry, it's not 2023, it's 2022. There you go, it's 2022. So the last low is in 2022. This cycle, the 7-year cycle, I don't have time to show you here. I don't want to waste time on this. Just watch lesson 5, those of you who can. And before the end of the year, you can probably find it on YouTube. Also re-edited, new sections added, maybe, probably. The 7-year cycle in gold is very regular. It is, it's why I love trading gold, because these cycles are very, very regular. It's not like Bitcoin's 4-year cycle that can be off for a few months. This one is pretty much always on time. And so if the last low for this 7-year cycle is in October of 2022, you would expect to see the next low sometime in 2029. Pretty much that's what you would expect. That being said, I will say that going parabolic like this, that typically happens at the end of a 7-year cycle, not halfway through it. So this type of price action is indicative. It's what you would expect at the end of a 7 and 15-year cycle. It's what we saw back in 2011. That's what ended the 15-year cycle that started all the way back in 2001 to 1999. So I will say there's a probability here. This is not my base case. I would say there's maybe a 20% chance that this is actually the 7-year high, just based on price action, just based on hype, just based on how much it went up. Not my base case for a couple of reasons, primarily timing. This cycle is very regular, and this is too early for this high to be taking place right now. So that's the number one reason. Number two, the second reason is all the accumulation we're seeing from nations like China and the BRICS buying gold, trying to replace the dollar. And I don't think they want to replace the dollar with their own currencies because they have zero credibility. Like, you can hate the dollar as much as you want. All these other currencies, virtually all of them, they're far worse than the dollar. So no one is going to take the yuan or the Brazilian real, or I don't know what currency they're using, and I don't know, like the Indian rupee. None of these currencies have a snowball's chance in hell of competing against the dollar. That's not what China, because I think the BRICS is just China and friends. The Chinese are smart. They don't want to introduce the yuan. Actually, they don't want that because they have capital controls in China. They don't want to get rid of those because they like to manage their currency. And if you want a global reserve currency, it needs to be a free floating currency. The dollar is created by banks all over the world. I can go to my home country in Uruguay and take up a dollar loan. I can borrow dollars in Uruguay. And this is a feature, not a bug, of the US dollar. So suffice to say, none of these fiat currencies have any chance of competing against the dollar. What they're trying to do is introduce a neutral reserve asset. And a lot of crypto people are saying it's got to be Bitcoin. It's not going to be Bitcoin because Bitcoin's too small. Bitcoin's about $2 trillion in market capitalization. That's just too small. Also, the dollar, for all I know, it works just fine as a medium of exchange. The problem is the debasement. The problem is the constant money printing. But money is technology also. It is a piece of technology. And the dollar infrastructure is second to none in the world. SWIFT, I mean, all these dollar payment mechanisms. And the fact that the United States is pretty free, it is losing its freedom now a little bit. The dollar is. They're confiscating Russia's dollar reserves and all of that stuff. That's not good. But it remains the freer or the freest currency in the world today. It's not going to get replaced as a medium of exchange. It's going to get replaced as a store of value. And that's why people are buying gold. That's why countries are buying gold. I don't see that going away. And because I don't see that going away, I don't think gold has stopped out yet. In fact, I think that this 15-year cycle ends with gold being reintroduced formally into the monetary system, maybe as a settlement currency, like countries settle their accounts by moving bullion to one another. China is trying to establish themselves as the center of world gold trading. Gold is playing a role in the monetary system here. So for that reason, I don't think it's topped out yet. So I don't think this is anything other than an 18-month cycle top, because I think that it just got ahead of itself. That's all. It just got ahead of itself. And most of this move between September and October is mostly headlines and hype. It's not fundamental. We're getting away from trend. And now we're just pulling back toward the trend, the natural uptrend that this market is enjoying probably for the rest of this decade. So that's all I said about gold. I think I've said enough. Probably an 18-month cycle high, definitely done for now, but I don't think it's more than that. I don't think it's more than an 18-month cycle top. All right, so next question is from Zoom user. I don't know who you are, so apologies for that. You're asking about altcoins. My view on altcoins has been the same, and I knew I was going to get asked about altcoins because you guys want to know. So let's go to altcoins before I move back to other questions. So altcoins, what I use to track whether or not altcoins are doing okay or having their moment in the spotlight is what you're seeing here. It's total 3, which is the market capitalization of all crypto assets minus Bitcoin, minus Ethereum. I don't know if this one excludes Solana also. I don't think it does. So total 3 is the market capitalization of altcoins excluding the top two, Bitcoin and Ethereum. And I'm also excluding the market cap of all stable coins or the major stable coins, USDT and USDC. And then I'm dividing that by the market cap of Bitcoin. So this is a ratio of altcoins to Bitcoin, excluding stable coins, excluding Ethereum, which is not really an altcoin anymore. And let me show you what this ratio used to do in past bull markets. And I actually have the two of them set up. This big rally that you see here, this is the last bull market. This is the last 4-year cycle in crypto. You see this huge spike of alts versus Bitcoin. You see altcoins rallying by, and Zoom user, I think I know who you are. So this is for you, sir. You asked me what I think about altcoins. You've been asking me about this for weeks. This is what I think about altcoins. They're dead for now. As a group, select altcoins, they can do well. In the last bull market between, I don't know the dates, between January of 2021 and September of 2021, alts outperformed Bitcoin by 4x. And keep in mind, this is in a time period where Bitcoin is undergoing its strongest move in that bull market, in the 2020, 2021 bull market. Bitcoin was going from 10K to 70K. And within that move, as Bitcoin was doing that, altcoins as a group were outperforming that by a factor of 4. They were rising 4 times faster than an asset that moved up about 20x from low to high, or more than 20x from low to high. And alts were doing 4 times that. That's 80x on average. This is your average altcoin, not your median altcoin. By the way, we get into that discussion at Wise quite a bit. This is not your median altcoin performance, it's the average altcoin performance. And you can see that they're destroying Bitcoin returns, even though Bitcoin itself is doing quite well. So that's remarkable. That's what people call alt season. All right. What about the last time? This is 2020, 2021. What about the time before that? Well, for that, we actually have to bring in Ethereum, because the last major, I don't have that. I don't have this. How come I don't have this? Hang on. Let me just set this up properly. We should have this. Total 2. There we go. Let's see. We need to see. There we go. Perfect. I have to see beyond. So remember, in the last bull market, 2020 through 2021, altcoins beat Bitcoin performance by a factor of 4x. And that is if we exclude Ethereum, because Ethereum itself did quite well in the last bull market. And I think when we bring it in, we see better performance. Now we see the same. We see about 350%. It's the same thing. Back in 2017, 2016, Ethereum is an altcoin. Ethereum is a very new asset. And look at this. Check this out. In the second to last bull market, 2016 through 2017, I have the number right here because I've run this number a billion times for Wise. The second to last bull market, the 16-17 bull market, altcoins outperformed Bitcoin by almost 6,000%, which is an insane number. Like, the analysts at Wise have run the numbers. The average altcoin rally in the 2016-2017 period, and I'm not kidding, this is actually true. It sounds insane, but it's 230,000% returns. The average altcoin, I checked the numbers, it's true. Now, you really should use the median, not the average, because when you see outliers like this, average can distort the returns, but still, I think the median altcoin return in the 16-17 period is like 50,000%. Which I don't think does better than Bitcoin, but it's still a remarkable performance. So we went from 6,000% better than Bitcoin to 400% better than Bitcoin. And where are we now? Well, this is the current bull market. The current bull market starts in 2022. It starts right here, November of 2022. I think I said October. November 2022, the last bull market begins. The current bull market begins. Remember, you need to see this ratio go up. You need to see it go up by 400%, at least 200%, something. You need to see it go up by an amount. But what do you see instead? What you see instead is that for years, since 2022, so for 3 years, this line has gone down. No alt season. When I say there's no alt season, and there's no hope for all season, this is what I'm talking about. I am referring to this chart, which in the past picked up alt season. In fact, at Wise, I think pretty soon they're going to launch this alt season indicator for whatever it's worth, and it's this. It's the ratio of altcoins. We're gonna do some work on that ratio, or which altcoins we include into this. It's not just gonna be a basket of everything, but you can use a basket of everything. And it's just, once this basket of altcoins outperforms Bitcoin and this line goes up, then yes, you can say that the crypto market is in alt season. We have not seen it. Now, we have seen many alt season. In fact, we just went through one, but it's these small rallies where altcoins outperform Bitcoin by 30%. We saw one of those. I think that's meme coin season. Then we saw the same thing in 2024 when Trump won the election. We saw mini altcoin season. Again, alts rallied by 50% more than Bitcoin. And recently, as of the passing of the Genius Act, we saw a little bit, another mini altcoin season where alts rallied by, let's see, 40% against Bitcoin. But this is not the type of explosive alt market that we normally see. Now, are we going to see this in the future again or not? I honestly don't have an opinion. I don't think alt season was silly. Alt season had no reason to exist. Most of the stuff that went up was junk. We saw that in 2016 and 2017. The same thing happened in 2020 and 2021. Most of these things that were going up were total garbage. They went down to zero. They fell by 99% and they never came back. So part of me is not surprised to see that we're not actually seeing this widespread alt season this time around. Is because most of these projects are junk anyways, and maybe the market is mature enough that it recognizes that these are junk, maybe, or maybe it has something to do with the fact that this has been a weak bull market compared to bull markets of the past. And I've talked about why that is in other AMAs. I'm going to get into this probably today also. I think it has to do with liquidity. I think it has to do with these alt seasons of the past took place when world central banks were pumping trillions and trillions of dollars into the global financial system day after day. Well, not a day after day, year after year. So we were in this very, very dovish central bank money printing, the money currency debasement regime. We are not really there anymore, or at least we're not there currently. And this cycle is about to end. So the reason I started saying in late last year, because it was late last year, after this failed alt season that we saw when Trump won, this is what convinced me that we're not going to see alt season this time, is because we tried many times to get alt season going and it failed every time. And as we went into 2025, the reason I said I think we're done with alt season, I don't think we're going to see it, has to do with the fact that the cycle is ending. The 4-year cycle is about to top out, and we're not really seeing it. So we're not going to see, if we haven't seen it by now, we're probably not going to see it at all. Can something change with that picture? Can the market suddenly get super bullish where it hasn't been bullish for years? And then suddenly alts wake up and they do a 3x against Bitcoin? Sure, anything is possible. I don't see a reason why that would happen at all. And like I said, in the past, you could point to specific things that were taking place in the world of macro and within crypto itself that kind of explained alt season, retail involvement at all-time highs, money printing up the wazoo, that type of stuff. We're not seeing any of that in this cycle. Maybe we see it in future cycles, but not in this cycle. And so if it hasn't happened by now, it probably won't happen at all. So that's my view on alt season. It's just too late now to expect it to take place before the crypto bear market begins, which is set to begin sometime next year. So this is what I'm saying, we're not going to see alts as a group rally 2, 3, 4, 5x against Bitcoin before crypto winter begins. After this bear market, this incoming 2026 bear market, maybe we see it again. I wouldn't be surprised to see another. I think there's a case to be made for another alt season in the future, but not in this cycle. And as a trader, I'm only concerned about what's happening in the current 4-year cycle. I'm concerned about, right now I'm looking for when is the next 4-year cycle high going to take place. That's what I'm focused on. And I don't think that between now and then, we're going to see altcoins massively outperform Bitcoin. The only reason I would see them do that is because maybe Bitcoin begins to fall ahead of the altcoins. So altcoins hold the ground while Bitcoin is already entering bear market territory. Maybe So it wouldn't be a tradable alt season, or maybe it's another of these mini alt seasons where alts go up, 40 to 50% against Bitcoin. But I think the reason you're asking that question, good sir, is you haven't felt this alt season. You haven't seen it. You haven't traded it. You haven't experienced it. You're wondering when it's going to begin. Unfortunately, like I said, I don't think it starts this cycle. I don't know about future cycles. Every 4-year cycle in crypto is different. The next one is going to be different also. I don't know what it's going to bring. It's going to bring things we haven't seen before, because that's what happens every time. And there's a lot of good alts out there, and some alts have done well against Bitcoin. I mean, Solana initially in this cycle did pretty well. BNB recently has been doing pretty well. Sui was also doing quite well against Bitcoin. So there's isolated cases, and I trade quite a few of them in the vaults that you see on the Discord. Just an FYI on the vaults. Typically, each vault trades 10 different assets. So one of them is Bitcoin, the other 9 is altcoins. I'm not against altcoins. I'm not against trading altcoins, but I'm very selective in which ones I trade, how much I allocate to them. And I'm not expecting alt season. I'm just trying to make some money here and there, just trying to color my crypto portfolio by adding alts to the mix. But I'm not expecting them to do a 5x against Bitcoin. I think it's too late in this cycle. It's just too late for that. We're probably not going to see it. All right, moving on. So Perry's asking, could we overlay the same candlestick pattern from the previous gold cycle on top of this cycle for any correlation or foresight? Perry, I know you did that on the Discord. I'm not sure how you did that. I think you used this tool. Let me try and do that. This is an awesome tool actually, but I don't use it that much. I think it's this one, right? Bars pattern. I don't know where to begin. Kind of like this, like that. My apologies. I don't exactly know how you did that. Maybe you're talking about the previous. Maybe you're talking about this rally. I guess we could do that. Let me see if this tool will actually work out. So let me just overlay this, and then I'm just gonna move this all the way to the start of the 7-year cycle. And you see it right here. And actually, from that perspective, I messed it up. Let me see. So this is the 7-year low. I'm assuming you're talking about this. You're asking about this. This is the 7-year low, October 2008. This is the high, September 2011, August 2011, and this is the correction that followed. And I guess I can do this and overlay it and look for timing indicators. And I think it's not good. It tells you that we're probably done. And remember so I don't want to mess it up. So let me try and do something here real quick. Let me add a vertical line just to stay on that date, because I actually want to fit it to the price action. There we go. I want to fit it to the high, but it should end. There we go. Perry, I'm assuming you're speaking about this, so projecting the cycle. Now, I will say, this is called autocorrelation, I think. And I try to do this, like I try to slice the data in different ways to see if you can use a market to predict itself just by using past cycles. And you sort of can't. Sometimes you can't, sometimes you can, but then it breaks down. It's hard to do. I actually did that. Alex, you're still here. He and I recorded a video on November 23rd of 2022. I actually have the video on my Google Drive still. And we called the bottom to the day. And what we used, or what I used to call for that low, a Bitcoin low in November of 2022, is I did exactly this. I extrapolated the last 2 bear markets into the present, the 2018 and the 2014 bear markets. and I lined them up at the high in 2021. And both charts suggested that the bear market low would be November of 2022, and it worked. So this type of, you can do this. You can project a past cycle into the future, and it can be very accurate, but it's hit and miss. It's like FLDs. Sometimes it just fail. I mean, sometimes they work, and sometimes they just don't. That being said, I will say it's pretty curious. If we line up the second 7-year cycle that we saw prior to that August of 2011 high, and we overlay it onto this one, the high, we would have expected the high in line with my forecasting model in September. That's when you would expect the high. And the price action is quite similar. I will say it is quite similar. It is the last time that we saw an absence of the 18-month cycle correction. So yeah, like I said, there's a probability that this is the end, that this was a major high in gold. There's a probability. Not my base case. I am in cash. I could not care less whether or not this is the high. I have no gold currently, simply because there's a lesson here that I would like to impart on you all. When there are certain patterns that are unmistakable, no matter which asset class you're looking at. If everybody's piling onto the same asset and they're tweeting about it, and your friends are telling you about this great investment that they found, and they're giving you investment advice, stay away from that market. And that's what people were doing with gold recently. I mean, I couldn't help but notice, but everybody was all over gold. It was all about gold, and it was all about how gold is going to go to 10K. You still see those headlines. This is all indicative of a major cycle high. And at those times, when a market is going parabolic and everybody's tweeting about it and your friends are telling you about it, I tend to ignore everything else. Like, I don't care what the forecasts say. I don't care what the cycle picture is. I don't care about anything. I just care that this thing is overheated, it's overbought, and it's likely going to crash. So I cash out the moment I think the crash is started. And when I saw that minus 5% day on October 20th, was it October 20th? Yeah, it was October 21st. I cashed out. I don't care. This thing needs to cool off. Again, I think it's an 18-month cycle high. Maybe it's a 7 and a 15-year cycle top. It could be. I'm not against that view. It's just not the view that I hold currently, because I do think that there's plenty of more runway for gold. I do think that. I do believe that there's some good catalysts and some good reasons to expect gold to go higher within this decade. So I'm not expecting gold to do what it did back in 2011, which is it fell for years. And you can see it here. I mean, the projection would be for gold to fall to at least 2020. What is this? Why can't I get the date? So this date is whatever. This is like 2027, 2020. Oh, okay. It's like 2028. Good gold. Has gold topped out between now and 2028? It could be, maybe, but I don't think so. It's not my base case. My base case is 18-month cycle pullback, and we should see a significant low sometime in May. Remember how I brought up May, 3,500? Look, the analog tells us to expect an 18-month cycle low, May, 3,500. So we get this low. We get this rally. Let's say it does exactly this. We get this rally. This is an 18-month cycle rally. If the rally fails, we're going to talk about this next year probably, because gold is one of those things that is back in action, is back in play again. So we're going to talk about it. But if we see this, what looks like an 18-month cycle low, we see the rally following that 18-month cycle low. But if the rally begins to fade and the 18 cycle low, if the 18-month cycle low is crossed, so we have a lower low and a lower high, lower low on the 18-month cycle, that's it. That's a 7-year cycle high that took place in October. We will know, but we're not going to know now. If you look at the cycle picture now, like I said, you would not expect the high until 2027. But if we see a bearish, a lower high and a lower low on the 18-month cycle, that's it for gold. It stopped out on its 7 and 15-year cycle components, which means This is not only the high. You would not expect the low until 2030. You need to be flexible as a cycle analyst. Like I said, I think this is an 18-month cycle pullback. And you can see that even if this was a top, this is an 18-month cycle pullback. It's only after this failed rally that the proper 7-year correction unfolds. And since we're also lining up with a 15-year correction, a 15-year cycle correction, then yeah, the next correction is going to last for many years. But we won't know now. We will know it next year. We won't know now. So for now, I would say, forget all this. This should not be your base case. Don't buy gold, at least not until it's pulled back to 3,500 or so. And then we can see, then we can reevaluate. And of course, we're traders here. So if it makes a new all-time high, if it rallies against all odds and it makes a new all-time high, guess what? I'm wrong. And all of this is wrong. And this thing is going to rip higher. It's going to go to 5,000. So keep every scenario in mind. There's a scenario where the rally continues. There's a scenario, and this is my base case, where this is just an 18-month cycle pullback. There's another scenario where October of 2025 was the 15-year cycle high, and gold is heading much, much lower. But like I said, not my base case, not what I think we're seeing. So when is the best time to get out of altcoins? Probably by the time the next 4-year cycle takes place on Bitcoin. Zoom user. We're gonna talk about that in just a minute, I'm sure. So the next time to get out of altcoins, just to be clear, is when the 4-year cycle peaks on Bitcoin. Why Bitcoin specifically and not altcoins in particular? Well, because altcoins are not really leading anything this time. Normally, you can wait a couple more months to get out of alts after Bitcoin has topped out on its 4-year cycle. But in this case, as soon as Bitcoin has confirmed its 4-year cycle high, liquidate everything. That's what I'm going to do. Not financial advice, not trading advice. That's what I'm personally going to do. And I think we may be near. But I'll wait until someone asks that because I want to get through your questions. So in 2011, Perry's asking, in 2011, gold, there was a second push up for a slightly higher top. Any chance that happens now again? 5,000 maybe. Perry, that didn't actually happen in 2011. Yes, there was a little bit of a push higher, but it didn't make new highs. This is the high in August. A high in August is 1900. And on a daily closing basis, the highest close, the reason I say the high is in August is because the highest daily close took place in August, but this high of 1900, it was retested in September. Could we see that again? Sure, we can see that again, but it's not going to go to 5,000. If it goes to 5,000, this thing is breaking out. It's breaking out, which would negate everything I just said. Forget everything I said. If you see that, it's ripping, it's continuing to go. And in my opinion, this will be a continuation of the uptrend because I mean, if you buy this breakout, 4,300, let's call it 4,400, you buy that breakout and you sell for 5,000, that's a decent sized trade for gold. It's pretty good, especially if it turns higher. Now, I'll jump on that trade if I see it. I just don't think we will. You're right in pointing out there's usually a secondary high, and we're probably going to see it. I would not be surprised. I didn't say probably. I wouldn't be surprised to see it. This is typically how these big tops take place. We see a secondary high. Sometimes it's slightly lower. Usually, actually, I think the usual pattern is secondary high, slightly lower, and then the proper correction gets underway. It can also be a double top or slightly higher. Maybe for 1 or 2 days, you can see a higher close, but you should see people liquidate at those highs. Notice that if we go to 2011, you can see people liquidating as gold approaches $1,900 again. So it approaches $1,900 on September 2nd, 2011, totally random. But then the next day, it opens higher on Tuesday and ends the day lower. Liquidation. People are selling. And you could see that every time it tried to go for $1,900 again, liquidation, liquidation. So that's your tell that the market is just not ready or not willing to go any higher. So once we see 4,400 again, 4,350 or so, if we see people liquidate on that exact same day, that tells you this is a significant high. However, if it breaks above 4,400 and it stays there, closes the day there, you don't see any people step in to sell, then this is not a significant high. This is just yet another high. a 20-week pullback. That's all it is. But I don't think we're going to see that. I'm pretty sure this is a major high because these, I mean, you can go and look for yourself, but you can just pull up a chart of gold and just look at these 5+% corrections on gold after parabolic runoff. That usually ends the rally. I would say 9 times out of 10 that ends the rally. Or like I said, I mean, I've seen these either during a bear market or at significant highs, but I have not seen gold go down by 5% after going parabolic and then just suddenly recover from that and keep going higher. I'm not seeing that. So I don't think we're going to see this time either. All right. So Barry's saying technically silver at $50 now is the equivalent of less than $20 in inflationary adjusted dollars. Silver can easily go well past $100 an ounce now and still not touch the real value of silver's previous $50 high. Mike Maloney says $12 will be the inflation adjusted price now. I agree 100%. I think that if you take that argument of inflation adjusted silver, that's why I said maybe it goes to 500. Yeah, that argument makes sense, but markets are markets and they like to trade around psychological levels anyways. Like I said, my base case is not that October was a 7 or 15-year cycle high in silver. So or gold. So I actually do think that that there's a very good chance that silver goes to 100 or 150 or maybe 500. I don't know. I don't have a strong opinion. All I'm saying is I think it's done for now. And I think the trigger may well have been the fact that silver did get to 50, because even though on inflation adjusted term, nobody looks at it that way. People are looking at charts and the fact that it's resistance at 50 and it's a prior all-time high. And it was tested in the 80s, I think. And it was tested again in 2011. That also ended Bitcoin. Sorry, I keep saying Bitcoin. See, because I'm a little under the weather. That also ended the last rally when it went to 50 and it went to 50 and it sold off and now went to 50 and it sold off again. So yeah, inflation adjustment makes sense over time. Yes, we should see commodities make all-time highs. And I think silver is no exception. And like I said, I'm not against the idea that silver is going to go to 200 in this cycle. Maybe it does, but not before a significant pause. So like I said, as a trader, that's all I care about. I care about the next move. And I think the next move is lower. Even if you think that silver is still low here, it is. I think gold is low. I think gold should be trading for $10,000 an ounce, but I don't control this market. And price is truth. And the market is saying gold is worth $4K, $4,000. And I think that's deeply, deeply undervalued. But as a trader, as a market timer, I don't care about that. Like it can go a lot lower. Sure, maybe it's undervalued now. It can get a lot more undervalued. I'm going to buy it at 3,000 if I see that. Gold at 3,000 is deeply undervalued. Maybe I'll pick it up then. But right now, the cycle picture says to me, this thing has made a significant high, and that's all there's to it. And so has silver. Anyways, currencies race to the bottom. I could not agree more. That's why I'm in crypto. Actually, before I move on, guys, let me just turn on one of these lights because it's getting dark around here. I'll be right back. All right, hopefully it looks a little better. Yeah, it looks a little better, I think. So Zoom user is saying again, the 2017 altcoin rally started only from December. Wrong, sir, that is not true. The 2017 alt rally started pretty much all of 2016, all of 2017, it was alt season. So let me show you here. I know these charts because I mean, I get into this argument at Wise a lot. So I know these charts very well. And alts started to outperform Bitcoin in the last cycle. I have the low pinned here, November 2016, but you could make the argument that it started earlier than that. You could say that it started in November of 2015. Pretty much the entire 2016, 2017 bull market, it was alt season. Alts were doing better than Bitcoin throughout that bull market. So no, it didn't start in December, not at all. And it lasted for 2 years. And then if you go into the recent one, The last alt season was pretty short to me. I remember feeling like, hey, is this it? And it started in January 2021. It ran through January 22, just a year, as opposed to 2 years before. You can see that these are getting weaker and shorter, and now we haven't even seen it. So yeah. Perry's saying those alt rally peaks on your alt BTC ratio chart look fairly periodic, cyclical every 12 months or so. Yeah, I don't know what this is. Let me open that. Yeah, I don't know. This is the alts. This is not a chart of alts versus Bitcoin. You need to look at it. You need to divide by Bitcoin. I can show you how to do that. You just go on TradingView, and then you say, for example, total 2. That's the crypto market cap of crypto minus Ethereum. That's total 2, and then you just divide. Use this symbol, division, by the market cap of Bitcoin. That's what you need to look at. You don't look at just altcoins in isolation. You look at the ratio between alts and the market cap of Bitcoin. That's what gives you this alt season indicator. And I'm not making this up. This is right here is when the current bull market begins. And the whole time, alts have been falling against Bitcoin. The whole time, the whole way for 3 years. That's not going to change. Listen, maybe it has. This rally has been a little better in the sense that alts didn't crash against Bitcoin. This rally has started in July and June. Maybe it keeps going, and maybe we'll be able to say in a few months, hey, because I think we're going into the last phase of this 4-year cycle. Maybe we have an alt season. Like I said, it's just like silver. Not against it. I'm just not betting on it because it hasn't happened, and I don't really see why it would now. It's too late. So I'm not against the idea or the notion that alts can do better than Bitcoin for months and rally 2 or 3x against Bitcoin. Not against that notion. Not my base case. Not building portfolios around it. Not recommending that anybody load up on altcoins because it's about to take place. It's banana zone time again. No, I'm not saying that. I don't think that. And that's all there's to it. All right, so there will probably, Perry's saying, there will probably be entirely newly invented alts released by the time the new crypto cycle starts in 26 or 27. Perry, that's exactly right. That's why I'm not against altcoin season in future cycles. In the 2027 through 2030 cycle, I think we might see alt season then, a powerful alt season on the back of altcoins actually getting better, actually getting useful, because so far, the alts that we saw in the previous cycle, I mean, let alone 2016, 2017, that was mostly ICOs, it was mostly junk. Those alts don't even exist nowadays. In the last cycle, we saw higher quality alts coming to the market. Uniswap, Aave, we saw Solana. You could make the case that Cardano, pretty solid project. Like the quality of the alts that were doing well in the previous cycle got significantly better. But I feel like in this cycle, we're kind of like stuck in no man's land where there's a bunch of good projects, but the tokens associated with those projects are complete garbage. I saw somebody tweeting recently about Maple Finance. And Maple Finance has this token called Syrup. Now, I'm not sure what Maple is exactly, so I don't speak to the quality of the project. I am just saying that it was being praised by people, by analysts, crypto analysts that I trust a lot, including some of the analysts that we have at Weiss. So everybody was all over Maple Finance, how great it is. So I decided to look at the token. This is the classic example of why I'm not so bullish on alts this cycle. It's because people don't know what to do with the token. So this is Syrup. This is the Syrup token. Now I'm sure it's done. This is on Binance. I don't know if I can get the feed from a DEX. Maybe I can. Let's see. Can I do that? Bybit, Python. Let me see. Let's use an Oracle. No, this is not it. Syrup against, let's see, where could we have seen a perpetual contract here? So anyways, this makes my case anyways. When this token got listed on exchanges, it didn't do anything. I don't follow Syrup. Maybe it went from 3 cents to 33 cents where it sits today, and it did a solid 10x. But as the token, no matter how good the project is, the token doesn't really capture that value. I've had that issue with tokens since I did crypto ratings for Wise in 2018. I said the problem with tokens, it's not that the project is bad, it's that the token doesn't capture its value. You're not buying shares in a company, you're buying a token. And for the most part, projects and founders haven't figured out what to do with those tokens. So they just launch them, they mint a shitload of them, so much so that no matter how solid the fundamentals are, the fact of the matter is all of the issuance that is taking place overwhelms any fundamental value that may be accruing to that token. And it completely destroys the price of that token. It's just a bad investment. And even Solana has this problem, but let's not even talk about Solana. If you look at, I don't know, Jupiter. Jupiter is one of the best exchanges on Solana. Look at its price performance. High issuance. Why do you think it hasn't done anything in this bull market? High issuance. They just print a shitload of it. That's the problem. They print too much. That's why you can't buy it. You can't get involved with it. I have an issue with a bunch of them. There's actually a couple DeFi projects that I love and I follow them, like Athena, for example. Athena is a phenomenal project. Token hasn't done anything. Too much issuance. There's another one that's actually pretty solid as usual. I've talked about this one before. Now, issuance on usual is especially high. It's like 30% annualized, 35% annualized. Look at price performance. This thing's dead. It's down like, it's already down like 90%. And we're not even in a crypto bear market yet. CRV is another one that I love to trade. You guys know this. This thing can't rally. There's too much of it. I make 25% on it, staking it, 25%. You pay out of your own pocket if you don't hedge the principal. So you can buy CRV, you can stake CRV and make 25%. But if you don't hedge that CRV, and luckily in this case you can, you're going to lose everything because this thing will drop at least 25% a year, offsetting, canceling any staking rewards. This is the problem, right? They launch these tokens, they have these high staking rewards, but you pay out of your own pocket because the dollar value of each unit constantly drops. So there's a bunch of good altcoins out there, at least a bunch of good projects that have altcoins out there, but they don't capture the value. And maybe in the next cycle, they will capture the value. Maybe founders will wise up, will invent a new tokenomics model where buying these tokens allows you to, again, capture some of the value being generated, some of the fees, although that's being done and it doesn't work. In usual, you can get some of the trading fees. It's all very nice, but if you don't hedge that token, you lose everything. So that's the problem with altcoins. That's why I'm not in love with altcoins in this cycle. Maybe in future cycles, it gets better and suddenly they're not so inflationary. They don't print as many of them and suddenly it does well. I think the one that's not doing that is Hyperliquid Hype. And I think it trades much better. Yeah, it trades well. I don't think this one has high issuance. And it's a very solid project. No VCs, no early backers or anything. And you can see it reflected in price. It actually trades pretty well. Even so, I think it dropped recently because there was a bunch of token unlocks and whatever. So even this one has this issue with too much issuance, but it's one of the ones that doesn't have that much issuance and it's reflected in price. So this one that does capture the value of the underlying project, but most of them don't. All right, so Zoom user is saying the best thing to do is to offload once BTC gets to the top. Yeah, that's my view. Now, before I wrap up, because I have about 20 minutes before I really need to go. Let me switch over to Bitcoin before I answer your question, Perry, because if not, this is not even going to touch into Bitcoin or crypto. But I'm just going to read your question anyways. All right. If metals are stalling for 6 to 12 months and cryptos might have a little steam in BTC left, are there any sectors worth trading in the immediate upcoming months, or is it better to do so on shorter timeframes, daily, or work on shorting instead? Okay, so that's a nice segue into crypto. At least I'm going to take it that way, Perry, because I do want to talk about Bitcoin a little bit. Shorting, no, I don't think you can make a lot of money shorting crypto. I really don't, unless you nail the high. Like if you had shorted going into October 17 low, you could have made some money. Then again, if the October forecast was wrong, you would have gotten killed. And that's a problem when you're shorting, is you can get killed. If you want to make more than 20 or 30% on the way down, you need to use leverage. If you lever up to go short crypto, you can get absolutely destroyed in a very short period of time. So shorting crypto, not a fan. Is it better to trade on shorter time frames? I have sort of swapped or switched into that short-term trading mentality, but that's not because I recommend that. I actually expect uptrends when I buy crypto, but I've been forced into trading this range simply because I just want to squeeze more out of what I see is likely the last rally in this crypto uptrend. So let me switch over to Bitcoin now. And I think there's a pretty solid chance. You see here that I have highlighted the major lows that the model highlighted. We have the October 23 low, which I think is the 24th. So let me move that. And then we have, of course, a major October 17 low. We have this low here. And I think that at this point, I mean, all along, I thought Bitcoin would top out for $150,000. I'm not even sure it gets to 150K. Maybe it tops out at 135K. Max, I did a podcast with him recently, a couple of weeks ago. He asked me, and he had 135 in mind. He didn't think it could get to 150, even though he's like a super crypto bull, OG, whatever we want to call it. He had I thought that he was kind of, that on the back of his mind, he's thinking 135K, that's as high as we go. And I'm kind of in that camp. So what I'm trying to say is the reason I've been kind of trading my Bitcoin position so aggressively is because I kind of want to squeeze more out of what I see as the next final week rally. So I sold my Bitcoin actually here. Full disclosure, I sold all of my position at around 117 because global liquidity or central bank liquidity, this one, I think it's this one. No, it's this one. So this one showed us a high for like late September. And you remember in the last AMA when this sell-off had begun, I thought, because if you look at global liquidity, it shows us this high here on September 23rd, and it shows a steady downtrend into a low in late October. So when this sell-off started here in mid-September, mid to late September, I thought, oh, this is it. Bitcoin will continue to fall and make a low on October 17. But that's not what happened. This was just I don't know what to call it. This was just an intermediate pause. By then, I was already in cash. Now, when I go to cash and I want to buy at lower prices, what I do is I will sell calls. And in this case, I was shorting the 105K call here. Let me delete some of these lines. I was shorting these calls and I was buying a full position. I was using the money, sorry, not the 105K call, the puts. So the 105K puts, I was selling those. And I was using that to finance the purchase of 120K calls. Let me paint this green. So I buy calls, here, 120K, and I'm selling puts because I don't want to pay for those calls. I'm selling puts at 105 or 100, it depends. Sometimes I play around with the expiration cycles. There's no one size fits all policy here for how I trade options, but this is a general guideline. So I sell puts here, puts. So I was in cash, 150, 116K. I was buying calls, I was selling puts. I didn't much scare. So if the market had went down a lot, I would buy it. But if the market broke out against all odds, which is always a possibility, I would have a full position. This is how I allow myself to sell in what my computer model says is just a pause. My computer model never turned bearish here. It just went neutral. It went neutral. It actually went neutral in late August. And it has stayed neutral throughout this period for 2 months. It's been neutral. It will continue to be neutral for the foreseeable future because it goes neutral when an 80-day cycle low VTL is crossed. And this is the 80-day cycle low VTL that was crossed. It was this one here, connecting the April low, the April 80-day cycle low with the June 80-day cycle low. This VTL is crossed here for a few days in early August, and it crossed again mid-August. So from that point on, I'm basically, my trading strategies, I'm free to hedge or trade around this position as I see fit. And because of the forecast for a low in mid-October, what I did personally, I'm not advising that anybody copy this strategy. You have to know options. You have to be comfortable with that risk and managing that margin. But if you are, I was just hoping for a rally into the middle of the range here, 115, 117. I think I sold a single Bitcoin for 119. I think it was actually here in August. A single Bitcoin was sold for 119. Everything else was 115 through 117. So I'm in cash. This is what I have in October. I'm in cash. I'm short a bunch of puts. And I'm long a bunch of calls. When the market rallies, my calls go in the money. I buy back all the puts because now they have no value. Buy them back. And now I just don't care if it breaks out because I'm back to 100% long again. Am I happy that I sold 116? I bought again for 120. I'm not super happy about that. But in this context, I was happy with that position because I still thought, I'm not sure it's going to break out yet. You guys know about this because I put out a video on YouTube, I think on October 6th. I put out a video, or it may have been Friday, October 3rd. I put out a video and I say, I was reluctant to do this, but I said, hey, I don't think we can break out yet. And I pointed out on the Discord, you can check this out, that I said, hey guys, we have a high. We have actually a low forecast for October 5. And I remember, I think this was a Friday because I was having this conversation. I was having dinner. So it must have been, I must have said that on October 3rd. Yeah, it was a Friday, October 3rd. And I said, hey, that forecast is 2.0. That's a 2 standard deviation from the mean. That's a significant high forecast in this context because Bitcoin is breaking out and global liquidity, or rather central bank liquidity, continues to flatline. So I didn't think we were out of the woods. And the only time that I saw Bitcoin rally against flatlining liquidity was when the ETF was approved. Meaning, if Bitcoin is to rally against a backdrop of flatlining or declining liquidity, it needs a strong catalyst. The day before I put out that video on Friday, October 3rd, we had a meeting of all the analysts at Wise on October 2nd. And I asked everybody, hey, is there a catalyst for this rally? Is there a reason we're seeing this rally? And of course, the analysts had a bunch of answers. I didn't think any one of them was good. They were saying things like, well, there's a lot of contracts expiring on Deribit, a record number. Okay, that's not a catalyst. Then there were a bunch of Fibonacci levels. That's not a catalyst. There were a bunch of reasons why some of these guys called for the rally, but none of them were solid. And what I said at the time was, all right, that's not a significant reason. Okay, I get the Fibonacci. I get the liquidations. I get all these contracts expiring on there, but I get all that. I'm not saying that's not useful. What I'm saying is that's not going to lead to a sustainable multi-month uptrend, which was the implication if this rally, if this breakout had held, which it did not. So if this breakout was to hold and Bitcoin was to go into new all-time highs and get into this powerful uptrend, we need a catalyst. And the reason we need a catalyst is we have falling liquidity. We don't have rising. If we have rising liquidity, that's our catalyst. Liquidity is going up. That's why Bitcoin's going up. Liquidity is not going up and it looks like Bitcoin's going to break out. There needs to be a reason to replace that normal catalyst that is liquidity. We didn't have that. I was still pretty sure. I never, suffice to say, I never converted my calls into cash Bitcoin. Never. I thought these are October expiration. October expiration is actually this Friday on the 31st. I got plenty of time here that I don't need to sell my calls and buy spot Bitcoin because I'm still thinking we're not going to break out yet. And lo and behold, it crashed. October 10 is now like the worst crash in crypto history, the most number of liquidations, the most number of notional, the highest number of notional positions liquidated, yada, yada, yada. You know all this. So where was I going with this? Well, what I'm going with this is it doesn't look like Bitcoin is going to get into an uptrend unless liquidity picks up again. And before I go on, Perry, you're saying Max has always been much higher on BTC projections. Very surprising. Yeah, I was surprised to see Max say 135K. And actually, he asked me recently if I thought the high was it. And I said maybe, because I don't know. But yeah, I think we can all feel that something's different. Now, let me share with you, before I wrap up, what is different, what I'm watching. What I'm watching going into the end of the year. So we have this liquidity, central bank liquidity, which I have to say, this is the strongest correlation to Bitcoin price action currently. As far as liquidity goes, this is it. Central bank liquidity. This indicator was upgraded recently. They added a bunch of useless things, but this, you've seen the settings. This is all of the central banks. You add up all the central banks, you get this line. It has been flatlining since July 14, and so has Bitcoin. Bitcoin has been more volatile within this range than liquidity suggested, but the fact remains that both central bank liquidity and Bitcoin have remained range bound. Well, the bad news here is liquidity continues to be range bound well into January of 2026. In fact, it's starting to show a bottom here on January 15 of 2026. The reason I bring that up is because I ran the forecasts throughout June 2026. I haven't posted them on Discord yet because I want to wait until the end of the year to do that, until December of this year, to have the proper 2026 forecast. But I ran preliminary forecasts for 2026, and it shows a very prominent low. Showed a very prominent low. I think the reading is higher than 3, which is the same as October 17 and April 7. So a very high reading for a low, January 15, 2026. So it looks from that, if Bitcoin continues to follow central bank liquidity, it will continue to be range bound. And the next important high, I have it highlighted here. It's on December 8th or December 9th. It's between the 8th and the 10th of December. This is where this is going. So the next prominent high, it's going to be in early December if Bitcoin continues to follow central bank liquidity. Now, there's a second option. And the second option is that Bitcoin follows what I call Asian liquidity. And it's this line here. So a couple things here with Asian liquidity. And by the way, in future charts, just so you know, if you see the line being red, that's Asian liquidity. If the line is orange, that's central bank liquidity. I like to color code my lines. So that's a color code for all of you out there. And Asian liquidity, I'm just going to say it right out of the gate, it has not had a strong correlation to Bitcoin price action since the July 14 top. It hasn't. It's okay. It's much better than M2, but not a strong correlation. Here's the thing, though. If I zoom out, it has a strong correlation, especially since the 80-day cycle low in January of 2024. And that's an important 80-day cycle low because that's when the ETF was approved. And you can see that I highlighted the lows. I tried to highlight the lows here, the lows and the highs. So the 300 Bitcoins, 320-day cycle lines up very, very well with Asian liquidity. Not really central bank liquidity also. But this looks like this is what you want M2 to look like, a perfect match. And so I did a bunch of testing throughout since our last AMA, and I found out that if you strip out all liquidity components and you only leave 2, sorry, there you go. You only leave Chinese liquidity and Japanese liquidity. This actually has a stronger correlation to Bitcoin price action with an 84, actually it's 83 days, with an 83-day offset than M2 does. And global M2, throughout Bitcoin's price history, throughout Bitcoin's trading history, global M2 has had a better correlation to central bank liquidity than central bank liquidity. It has had a stronger correlation to Bitcoin than CBL. So, but this one's better. Pure Asian liquidity is a much better correlate, has a much stronger correlation. It's a much better prediction tool for Bitcoin price action than global M2 is, because global M2 is dominated by US liquidity, and US liquidity has almost zero correlation, actually has no forecasting power for Bitcoin. Pure US liquidity tends to stay within the US stock market or the bond market. It doesn't really affect crypto that much. Asian liquidity does affect crypto. So where am I going with this is, throughout crypto's history, Bitcoin has tended to follow this line, this red line, Asian liquidity. So even though recently it hasn't had a strong correlation to it, it has had this strong correlation throughout its history. So could we say, or could we see Bitcoin line up with Asian liquidity again and break out sometime? I think if you line up the charts, and I'm going to try to do it now. If we try to line up the charts, a little bit of curve fitting here. If we line up the charts, you can see that Bitcoin should be breaking out into new all-time highs sometime in late November. So if in late November, early December, Bitcoin is trading at new all-time highs, I will still be long, because I actually bought, remember how I sold? I bought back those puts when Bitcoin broke out to new all-time highs. Well, guess what? When it crashed on October 17, I loaded up again. Now I'm about 50% long currently. And I'm thinking of bringing that down to 50%. I think I'm a little longer than 60% long. I'm probably going to bring that back down to 50%, maybe 40%. I am not super convinced that Bitcoin is going to break out to new all-time highs by early December. But what I do know is if I bring up both liquidity charts, we see a bifurcation, which actually was the title of the last article that I submitted for Wise. It was called Bifurcation. There's two possibilities here. Right now, the best course of action was to buy around these lows. That's what I did, between 110 and 112. I didn't even pick the low. Somebody asked me, why didn't you load up on October 17? Well, the reason is because on October 17, Bitcoin had broken below the last 80-day cycle low, and I'm not sure what type of low we're going to get. I don't know. So I didn't buy then. I bought going out of that correction. So going out of that correction, I'm buying between 110 and 112. I'm very happy with that price. Now I hold cash Bitcoin at a bunch of calls. What am I going to do personally? This is personally, not financial advice. This is what I'm personally going to do. I'm just going to see which liquidity line Bitcoin is following. Is it still following central bank liquidity? If so, we should see, or rather, we should not see new all-time highs in the first week of December. However, if Bitcoin is trading for new all-time highs on the first week of December, guess what? It's falling back in line with Asian liquidity, which continues to be bullish. It continues to be bullish. So it shows all-time highs by December. It then shows a pause of significance, but I expect it to continue to make new highs well into 2026. So it's pretty simple. If Bitcoin is making new all-time highs in early December, then we can stay long, or at least I can stay long. If Bitcoin continues to be below 120,000 on the first week of December, I'm out. I'm going to get out again. Why? Because it's still following CBL. And if it continues to follow CBL, it's going to fall again. It's going to fall between December and January. And I'm going to be able to trade it again. So to answer your question, Perry, because this is what inspired everything, if you notice, I'm betting on an uptrend, but when the uptrend fails, based on our forecasting tools, I sell my position and I buy it back again at near cycle lows at 105, between 105 and 110, let's just call it. This, the low end of the range. So I'm kind of trading this position within this range. Even though I don't intend to, I actually want an uptrend. But if I see an indication that Bitcoin continues to be stuck in the range following this orange line, and let's say it stalls, notice that CBL is stalling here in November. Let's say it does. Let's say prices do stall throughout November. And that by the time we get to December, we're still below 123K or 125K. I don't know what the high was. We're still below that price. Well, that tells me that Bitcoin is following CBL. It's not following M2. That was clear months ago, but it's also not following Asian liquidity, which is not so clear yet, to me at least. It's not so clear. And so we have our line in the sand, time-wise. We have until December for a breakout into new all-time highs. If we don't see that, Bitcoin continues to follow CBL. And if Bitcoin continues to follow CBL, this is a significant high that took place, that it's going to take place in December. And even though I don't think this is a 4-year cycle high that took place in October, I don't think that's a 4-year cycle high. All I can see is that Bitcoin is following central bank liquidity, and central bank liquidity continues to be sluggish. Now, I know there's a lot of calls out there for the Fed to cut rates and for the Fed to start QE. All I will say to that is, based on my studies, none of that matters. The Fed doesn't matter. Lower rates could translate into other central banks in Asia easing, and it could lead to higher central bank liquidity, but it doesn't matter in the near term. And by that, I mean over the next 3 months. So for the rest of 2025, whatever the Fed does with interest rates, it doesn't matter. It will not affect Bitcoin in the way that we want. So I'm not saying October is a 4-year cycle high in Bitcoin. I am saying that it looks to me so far that Bitcoin is stuck in this range, unwilling to go, or unwilling or unable to go anywhere. And there's a clear test of strength here for Bitcoin over the next 30 days. Bitcoin must break to a new all-time high by the first week of December. If it doesn't, it continues to be stuck in this range at least through January and probably beyond January. And I am not going to hold any Bitcoin position because there's a chance that central bank liquidity, which by then it's clear that Bitcoin is following that line, there's a chance that this continues much lower. So I don't want that exposure. I don't care. I want to pick it up at lower prices. But again, the main reason for that is even if Bitcoin breaks out and it follows Asian liquidity, I think it goes to 135,000, maybe 150,000, and then it's done. That's my view. Now, do I think this is a 4-year cycle high in October? No. I think the 4-year cycle high is going to be late. I think it's going to be in April. But so far, we can't see that far using our liquidity tools. So I am not sure. I'm not sure it can rally all the way through April 26, or if the high has taken place already. All I can say is it looks like it's following central bank liquidity. If it is, then we're just about done here, at least for 2025. But there's a small chance that instead of following that central bank liquidity, it's actually following Asian liquidity and it breaks out into new highs. And if it does, great. I already have my position. I'm going to go to 100 to a full position if I see some indication that Bitcoin is actually indeed following Asian liquidity. And I'm not against buying some, like the remainder, the last 20% of my position. I don't mind buying that about 120K once I have solid confirmation that actually we're following Asian liquidity into new all-time highs. So that's a wrap for me. But I will answer your questions, the ones that are left, and then I have to go to this meeting. Apologies for that. I know that Alex, who's my hedge fund partner, in case you guys didn't know, he's already jumped into that meeting, but I have to get into that one. It's important. But I do have about, I think he'll spare me for about another 8 minutes or so. So the Zoom user is saying, when are you suggesting the market is going to top? Do you expect a super cycle on alts? I answered that question on alts already. No, I'm not expecting a super cycle on alts. However, there's a chance. And if there's a chance, it's between now and April. And my view is the cycle ends in April of next year, but there's an alternative view, which is it's already ended and it ended in October. But that was this entire presentation about Bitcoin. That's what it was all about. Hopefully I answered that question. So Perry is saying, I thought that gold was leading by 6 months. Doesn't that give better crystal ball than past liquidities? Perry, yes, the correlation between gold and Bitcoin is, the deeper I studied it, the more I realized it's not you cannot use it. And I actually have a video on YouTube, so I know that I mentioned this on a past AMA. The correlation between gold and Bitcoin is not as strong as liquidity in Bitcoin. However, gold does lead Bitcoin by 6 months. at the big highs, at the big turning points. Now, what were we saying with gold? We were saying that gold has probably made a major high in October. If you add 6 months, that takes you to April. Well, remember, I ran the forecast for Bitcoin through the first half of 2025 or 2026. It showed two major turning points. One was a low, a very important low, which actually I do believe it shows up or is starting to show up on central bank liquidity on, let's put it here. It showed a major low on January 15, and then it showed a major high, the next major high, I think it was on 420, for those of you who know the joke. 420, so April 20th. So it was showing that maybe Bitcoin's last major rally is between these two dates, January 15 and a high on April 20th. Now, so far, liquidity is not showing that, but by the new year, by January 1st of next year, we're going to see whether or not central bank liquidity is picking up and showing that rally on Bitcoin to take place in Q1. And that's my base case, really. I'm thinking we're going to get this Q1 rally. And to answer your question about altcoins, I think that maybe that last rally is the altcoin rally that people have been expecting. It will be nothing that like the alt seasons of the past, but it might be the best alt season we have seen this cycle. There's a chance. And why am I saying that? Because that Q1 2026 rally is likely to be the last rally in this 4-year cycle. So it's then or never. It is then or never. But remember, there's also a chance that we're about done here. Listen, the next 3 months are critical. The next 3 months are critical. If Bitcoin continues to flatline here, then we're not going to see any more out of crypto, out of Bitcoin or the altcoins between now and mid-January. But if central bank liquidity does pick up between mid-January and mid-April, let's call it, then yeah, maybe that's when Bitcoin goes to 135K. Maybe that's when it goes to 150K. Maybe that's when altcoins can finally do something against Bitcoin. But so far, we don't see that. Honestly, the biggest takeaway for you guys is that I'm watching this divergence. I recommend you watch this also. This divergence between Asian liquidity and central bank liquidity. Because by the first week of December, we should be seeing new all-time highs on Bitcoin. If we don't, we're stuck in a range for now. And so far, nothing indicates that this market is going to pick up in Q1 of next year. Nothing is suggesting that. It's just speculation. It's speculation based on gold's turning points, which are not even confirmed yet. And it's speculation based on some forecasts, some preliminary forecasts that I have for next year. So yeah, Perry, to answer your question, yes, there's a chance that gold does seem to indicate that there's this major high in April for Bitcoin. And yes, my own forecasting model does suggest that maybe, yes, we have a major high, probably a 4-year cycle high, because the highs, the turning points that line up between gold and Bitcoin are the big ones, 320-day cycles or 4-year cycles. Those are the ones that line up. So if this April high that we see on Bitcoin, that if it's picked up by gold, we're talking about a 4-year cycle high. So that's the one that gold will be forecasting. But again, very speculative right now. We don't have the data yet. I would love to see it on liquidity. If we see it on liquidity, then yeah, I'm all in for that Q1 26 rally. But I don't know. I think I'm a bit more focused on whether or not Bitcoin can actually line up with Asian liquidity again and decouple from this trading range that central bank liquidity is showing, because so far that range continues. It doesn't end. And Bitcoin's range hasn't ended. So that's really what I'm focused on. I'm focused on the next play. And my playbook, personally, is no new all-time highs for Bitcoin by the first week of December means I'm back to cash again. Probably going to do the same thing that I did in September. I buy calls and I sell puts. But many possibilities, some crystal balls. Yeah, Perry. I mean, especially when you see these metrics bifurcate, because CBL, central bank liquidity, decoupling from Asian liquidity, decoupling from M2, that is a feature of this bull market. Normally, all three metrics line up, whether you look at Asian liquidity or M2 or central bank liquidity up until 2022, all three look the same. That's the truth. All three look the same. So it didn't really matter. But now that central banks are doing one thing and then private banks are doing another thing, and Asia's printing money and the West is destroying money, it lends itself to more complex dynamics. And I'm just trying to track all these things. And I promised you guys I would have the perfect liquidity indicator for you all by October. We're here now. I don't have the perfect liquidity indicator. I don't think there is one, but I have narrowed it down to two possibilities. Asian liquidity shows a bullish Bitcoin by December. Central bank liquidity shows a sluggish range-bound Bitcoin by early December, going all the way through January. So those are the two possibilities. And bifurcating parallel universes do need to converge. I agree with that, Perry. I think that eventually all of these liquidity metrics will converge back into one, but I don't think we're there. You can see that we're not there yet. And with that being said, guys, I do have to go. I do have to get into this meeting. They're probably waiting for me. So thank you all so much for joining me. I'm going to have the recording up over the next few days. You're also going to see cuts from these sessions. You're going to see them on YouTube as short videos, 5 to 10 minutes. I aim to make them really short and sweet. And I'll see you all on the Discord. Again, apologies for making this a little shorter than usual. Hopefully the next one from my new home in South America, we're going to have all the time in the world. But with that being said, cheers everybody, and thanks for joining, and I hope to see you all in the next one, and I hope to talk to you all in the Discord. So cheers.